video, we will learn about trial balance meaning, advantages, disadvantages, and how to prepare a trial balance with the help of an example. What is a trial balance? It is a statement that lists all the ledger account balances of a business on a specific date to check whether the debits are equal to credits. The features are that one of the primary goals of the trial balance is to ensure that the entries in the journal and ledger have been correctly posted. It helps to aid in the preparation of the statements of comprehensive income and financial position. It ensures that both the debit and credit aspects of a transaction as per the double entry system have been properly recorded in the books of accounts. It helps to identify and correct any errors that may exist in the activities of keeping a journal and a ledger. It helps to gather all of the balances of accounts in one place in order to simplify the preparation of final accounts and thus reduce labor and time waste. Coming to the format of the trial balance, it is in the following manner. So firstly we need to mention the name of the business. It could be XYZ and company or anything as per the name. Then we have to write trial balance as on date. As I already specified that it is prepared on a specific date. So we need to mention that particular date. It lists all the ledger balances, cash account, capital account, drawings account, purchases account, and the balances of all this ledger is put in the debit column or credit column depending upon the nature of the account. We need to remember that if it is an asset, we need to put the balance in the debit column, whereas if it is a liability, then we have to put it in the credit column. Expenses are also be put in the debit column, whereas the incomes need to be put in the credit column as per the golden rule of accounting. What is the purpose of preparing the trial balance? Firstly, it is to check the mathematical accuracy. It ensures that the debit balances are equal to the total credit balances. It helps to identify any major recording or posting errors in the ledger. If the trial balance balances, then it suggests that the books are arithmetically accurate but not error-free. Secondly, it summarizes all ledger accounts. It provides a snapshot of all account balances in one place. It is useful for accountants and auditors to quickly view the financial status. For example, we can immediately see our bank balance, capital, expenses in just one list. Thirdly, it facilitates preparation of final accounts. Trial balance acts as a base document to prepare trading account, profit and loss account, balance sheet. It also saves our time and ensures that all necessary balances are available. Fourthly, it acts as aid in detecting errors. Some errors like one-sided entries or unequal amounts are revealed if the trial balance does not balance. However, it cannot detect all types of frauds or errors. For example, error of omission, error of principal. Fifthly, internal control tool. It is used by management to verify that transactions are properly recorded. It helps in internal checks and audits. It is useful for detecting fraud or misstatements early. Coming to the errors which are not detected by a trial balance. Firstly, error of omission. These are the transactions. It consists of transactions that are not recorded at all. For example, we have received 5,000 from a customer, but we forgot to record in the books. So neither the debit nor the credit was recorded. In this case, the trial balance will still tally because amount is not recorded on both the parts. Error of commission. It means right amount in the wrong account of the same type. For example, if we paid 2000 to Mr. A but we have recorded it as paid to Mr. B. Since correct side is affected but wrong creditor account name is used, Trial balance will still match. Error of principle. Fundamental accounting principle is violated over here. For example, if we purchase a furniture, so instead of recording it as asset, we have recorded it is as expense. The debit is made, but just that it was wrongly classified between expense and capital. Trial balance will still agree, but the following errors still exist. Compensating error. These are that two errors cancel each other out. For example, the sales figure has been understated by 1000 or the rent expense have been understated. The trial balance remains balanced but the errors exist. Fifthly, error of original entry. In this case, wrong amount is entered in both debit and credit. For example, if we have purchased goods worth rupees 9,000 but we have recorded it as 6,000. So here the amount is just recorded incorrectly in both the sides, in debit side as well as credit side. Trial balance will still tally. Disadvantages of trial balance are that it cannot detect all types of errors. It is not a financial statement but it works as a working tool. It does not show the profitability or financial position. It could be misleading if the errors exist. A balanced trial balance may give a false sense of accuracy when undetected errors are present. We'll solve a question. Before solving a question, we should note that in a double entry system, every transaction is recorded in a journal, debiting one account and crediting the other for the same amount of money along with an explanation. Now this transaction is posted from journal to ledger. The debit account of the journal is debited in the same account and credit account of the journal is credited to the same account in the ledger. As a result, the ledger account debit balance equals to the ledger account credit balance. According to the double entry principle, if all correctly drawn ledger account balances are properly recorded in trial balance in debit and credit money columns, the total of trial balance column becomes equal. Here are certain types of ledger account balances given and we need to prepare trial balance from that. We have already studied the format. Now, coming to opening stock. Opening stock is an asset for us. So, the balance of those that will be written in the debit column. Similarly, sales is an income for us and incomes are to be credited. We need to put the value of sales in the credit column. Purchases are an expense for us. So, it will be put in the debit column. Debtors are again an asset for us because we will be receiving money from them. Creditors are a liability for us because we need to pay to them. Salaries are an expense. Commission is an expense. Building is an asset, that's why it is to be debited. Bank overdraft is a liability because it means a negative balance in our bank account or sort of bank loan. Cash at bank is an asset for us. Return inward is to be debited. Return inward is also known as sales return. Discount received is again an income for us, that means it is to be credited. Bad debt is an expense. Tax and rates is an expense. Depreciation is also an expense. Furniture is an asset, that's why it's to be debited. Cash is an asset. We are not taking closing stock in our account because we have already accounted for opening stock, purchases and sales which constitute of closing stock. That's why closing stock is not recorded. Now we need to total this and see whether our trial balance is matching or not. If we total on the credit side, we will get 22,000. And if we debit onto the debit side, then also we are getting 22,000. That means our trial balance is tallied. Thank you. We'll look forward to other examples in our following video.